In this video, we'll be taking a look at a few chart analysis to get prepared for the week ahead. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. If you're interested in learning to trade first professional, check out our complete Forex learning course on Udemy. I have the link attached in the description below as well. So without further ado, we'll be starting with the gold chart on the 1 hour time frame. So last week we saw some extensive price decline all the way from these highs at 3,160 dollars per ounce of gold, right? And after the announcement regarding tariffs from the United States proposed by Donald Trump, we saw massive price declines across the board in all markets, and gold wasn't excluded. So you can see the heavy dump on crude oil, Nasdaq, and other major currency pairs as you navigate through the charts or the markets. So today, starting with the gold charts, what we want to see is fan price levels where we're likely going to see a price bounce, right? Because we're currently trading below the moving average. So remember, I used the 200 moving average, EMA and SMA, to create some sort of a range for support levels when we're trading within trends. So gold still in the bullish trend, solid one. And on the 1 hour time frame, we had a good bounce of this trend at these price levels, followed by another retest and a bounce before we had our initial breakout on Friday. So right now, I'm watching out for this area of value. So I'm watching out to see if price gets into this area of value on Monday or Tuesday or this coming week, and where I'm going to look for a bounce to send price higher. So I'm going to look for battery opportunities around this area of values if we do get there. So the reason why this area of value is significant is because going all the way back to December of last year, so December 2024, we've been trading above this trend line and we've had multiple bounce. So 1, 2, 3. So 3 good bounces off of this area of value, which is this trend line, which coincide right now with this other area of value here. So this consolidation before this move to the upside, and also flushes with these price levels turning into support here. And if you move on to the 4 hours time frame, for example, so on the 4 hours time frame, you can see the moving average, which is the 200 SMA and EMAs. They're closely or perfectly aligned with the RSI. So the moving average and our trend line, sorry, I said RSI, our trend line, excuse me. So the moving averages and our trend line perfectly aligns at this area of value, which confluences at this other area of value. And this would give us a very good opportunity to go long if we do see price coming to this area of value, right? So this is just what I'm watching out for this week. I am likely not going to trade any other thing this week because gold is where I'm setting my eyes on, because it has the best trade opportunities right now because we're approaching this area of value. So that's the bullish case scenario, for example. So I'm going to go over this again. So bullish case scenario will be price may pop off, go down, pop off, then before coming to this area of value. So however the market moves, but as far as we get into this area of value and we get a good bounce, right? We get a good bounce, then my entry is going to be after the bounce for confirmation of a bullish continuation or bullish reversal. Then underneath this area of value will be my stop loss, and my take profit target first one is going to be all the way at these highs, because I do think gold is going to climb higher when the dust settles. So the market is still in panic mode because of the tariffs. When everything settles, I think gold is going to continue its trend to the upside. So that's why I'm going to be going long on gold if this happens. Then on the flip side, for a bearish case scenario, I'm going to wait to see if we take out this trend line. So getting price to come into this area of value, consolidating, for example, and then taking out this trend line would be my confirmation to go short. So we'll be taking out this area of value, we'll be taking out the trend line, and we'll also be taking out the moving average on the 4 hours time frame. That's a very key thing to understand here. So entry is going to be after the breakout of all these levels. Stop loss is going to be above the consolidation of this sort of breakout, and take profit target is going to be all the way at these lows over here. So this is where I'll be watching for my take profit target. But as we go lower, I'm going to take some profit off the trade off my positions as we go lower, right? So I know this can be a bit confusing to trade because we have both bullish trade opportunity at this area of value. We also have a bearish case scenario. So what I do is, when I see my bullish case scenario, right, about to play out, I go in minimum risk, good risk management. So even if we get a breakout to the downside invalidating my bullish thesis, I can still go short because I have enough capital to take both trades, right? So trying to time the market as to the perfect entry sometimes may not happen, right? You may not get a perfect entry to give you that sort of 100% confirmation that we're indeed going higher. But if you apply good risk management, this is just a realistic way to trade, right? If you apply good risk management, you can go in when you get some sort of confirmation that we're going higher. But even if we do break through this area of value, hit your stop loss, it doesn't matter because you are trading with a good risk management, and your risk to reward ratio will ensure that you make some decent profits if you go short after the other side. And sometimes you may go long, right? And when you go long, it goes down, hitting your stop loss. And when you try to go short, thinking, oh, okay, now this is the direction we're headed, it goes back up. So things happens like that. So that's the reason why you must always trade with good risk management, because nothing is certain 100% in these markets. So I hope this helps. That's it briefly for gold. All that matters right now this week is watching out to see if price gets into this area of value. Then we're going to find a reaction from markets to see how we can spot our good trade opportunities for this coming week on gold. Meanwhile, one more thing to add is that when we get into this area of value, I think that was going to send price further below the relative strength index, so being oversold, right? So this is RSI. So imagine we're having a very good oversold level on the RSI. We're having a good area of value here. We're having this trend line that tracks back to December of last year, which also aligns with the simple and exponential moving average. There's no better trade signal than this, because we have multiple confluences confirming this area of value. And if we do get a bounce, then you should be ready to go long. And if it turns out we go the other direction after going long, you should also be ready to go short, as the case may be. It's a very critical area of value to watch out for and pay attention to this level, because if we get in there, that's what's going to present us with a very good trade opportunity for this coming week. Moving on, we'll be talking about crude oil. So crude oil finally broke through this area of value. I know this is a daily time frame. We're going to go down to the lower time frame, but just to do a quick recap, we've been talking about how price is likely going to take out this area of value for a while now, but it seems the big mover, the push the market has been waiting for to finally see price breaking through this level was Trump coming out with the proposed tariffs, right, which I think have been implemented right now, so to speak. So taking as area of value, I do think next price levels for crude oil is straight down. I do think we're going to go as low as these price levels first. Then we're just going to hit these different price targets, because Trump's goal is to bring oil prices down as low as possible. But I don't think at some point we're going to see some stabilization in oil prices. At what price we're going to see that stabilization right now, it's not certain. So it may be at $40, $45. But for now, I don't think crude oil is going to head way lower than it is right now. And for us to be able to take advantage of this trade, I'm going to go down to the 4 hours time frame first to see if we can pick out our trade entry, right? So this is 4 hours time frame on crude oil. Zooming in, you can see a clear breakout from this area of value, but this area of value is very wide, so there's no telling how a retest is going to look like, right? But I do know a retest is coming, or some sort of consolidation is coming, because price isn't just going to fall straight down till we get to the bottom, right? So we're going to see waves, which are some sort of breather for the markets to take a break and, you know, gathering some momentum before continuing the direction of the initial price movement. So right now we've seen some extensive price decline over here, and it's logical to expect some sort of reversal to the upside into this area value, followed by a move to the downside. Right? If this happens, then you want to be looking for a trade opportunity around here. So the reason why I'm giving you a rough chart is because right now it's extremely difficult to pinpoint exact price levels. So I'm just going to give you a rough estimation as to what I'm expecting, just so you can watch out for these signals, or these patterns, for you to decide how to get into this trade yourself. Right now, this crude oil analysis or crude oil chart isn't to give you some sort of entry price, but more of giving you an overview of what I expect from the market and watch something logical to watch out for, just in case you plan to get in on this trade, right? So price is currently oversold, and I do think for price to get back into the safe zone, so above the 30% relative strength index, I don't think we're going to see some sort of pullback into the upside into this area of value, followed by a rejection. So how high the pullback is going to be is, you know, not determined right now. Can't be, you know, seen on the charts, but I do know we're going to get some sort of pullback at some point. When we get a pullback, we get some sort of confirmation that we're going lower, then that will be your confirmation to go short or look for an opportunity to go short. So we may even pop off a little to the downside before we get a move to the upside, then followed by a move to the downside. So just watch out for a pattern, right? So don't just jump in on the trade right now, because it would seem as if you're trying to catch a falling knife. So imagine a knife falling straight down from the top and you're trying to catch the falling knife. It's going to, you know, destroy your hand, right? You're going to hurt yourself. So that's the same thing thesis with trading. So you don't jump into sell trades like this, because there's no telling when there's going to be those reversals, or there's no telling, or buy trade, for example. You can't jump into a buy trade, for example, because there's no telling how high price is going to go or how low price is going to go before we get those reversals. I hope you get the point. So alternatively, you could get some sort of move to the downside like this, then followed by a consolidation. So a bearish continuation pattern is what you're looking for, followed by a move to the downside. So something like this, so a bearish continuation pattern could be a symmetrical triangle with a bearish breakout, it could be a falling wedge, it could be a bearish flag. As far as after that consolidation, we do get a bearish breakout as some sort of a confirmation of a bearish continuation, then that will be your confirmation to go short. So you want to go short after you break out from that consolidation, a very clean breakout from the consolidation. Stop loss is going to be above the consolidation, at least to the breakout. This is just a rough chart, okay? I don't think your stop loss is going to be as wide as this, but it's just a rough chart to show you what I'm watching out for to go short. I won't be going long on this chart right now. I won't be going long on crude oil. Bad idea, really, really bad idea. So just be careful out there if you intend to go long. Bearish breakout from a very good area of value, and you should be looking to go short. And to go short, you should be waiting for those pullbacks and consolidation to give you better risk to reward ratio on your trade. Moving on, we're talking about US30. So US30, you can see the massive dump all the way from these price levels to the current price levels, and I am a bit upset about this because I missed this trade opportunity, right? I was looking for the perfect entry for this trade, but I missed it, and there's some nasty price decline to the downside. And for those who caught this, kudos to you. We're talking about how price is likely going to get rejected from this area of value, but we did get higher a little, retested the moving average on a 4 hours time frame, and saw a massive dump to the downside. So for those who caught this, congrats to you, and I hope you're enjoying your profits. So for now, I still want to go short, but I'm watching out for this area of value to see what price does. Now, whether we go straight down into this area of value is still yet to be seen. I have no idea yet if we're going to go straight down to this area of value, but similar principle with crude oil applies. When you get moves like this, you want to watch out for pullbacks, consolidations as some sort of confirmation before you go short. Similar to what happened here, right? You see massive price decline. We had a good consolidation right before we had a dump. So same thing applies in this case. So after this massive bearish price decline, you don't want to just jump to a buy trade, or you don't want to go short, because there's no telling where to put your stop loss. So logically, if you go short here, your stop loss on the 4 hours time frame should be around these highs, because this is the highs before the lows, right? The new lows. So if you go into a short position here, logically your stop loss is supposed to be placed around this price level. At least that's how I trade price action, right? But waiting for some sort of consolidation, like I explained earlier, so like this, consolidation like this, right, gives you better risk to reward ratio, because then when you go short after a breakout from the consolidation, it is easy for you to put your stop loss above the consolidation, at least the breakout. Very logical, and your take profit target could be around this area of values. This is I'm going to trade US30 right now, which is the Dow Jones. We're currently extremely oversold. We haven't been this oversold in a very long time, I think. Yeah, so let's just see if we can let's go down to the daily time frame. Oh, daily time frame is going to disrupt the chart, but on the 4 hours time frame, the only time we went this low is back in 2022. That's the only time we went this low in the RSI, right? So back in 2022. Right now we are getting close to those price levels again. Okay, I think we also got there in June of last year. Yeah, June of last year, then 2022, then now. So I think we can expect some reversal or some consolidation before we see further price declines, if that's the intentions of the market. And if you explore other charts, so let's say US 500, excuse me, which is S&P 500, you can see similar price decline. How do you get into a trade like this? You just don't. You stay patient, wait to for those consolidations or pullback, then find your entry. So you see what I'm explaining here? We got a good price decline to the downside, consolidation, followed by a move to the downside. So now you wait for another consolidation, then move to the downside. It may not happen, it may happen, it may take a while to happen, but you are better off waiting for something like this before picking an entry to go short, right? Because it gives you a better risk to reward ratio. So similar thing applies to US Nasdaq, so US 100. So this will be Nasdaq, yeah. So similar chart on Nasdaq, you can see close to this area of value, price has been oversold. You don't just jump in now, you wait for a consolidation like this before you jump in, because it gives you a better risk ratio, better targeted price entry before you go in on this trade. And trust me, you don't want to be longing this right now. Even if you try to long this, you are lucky we get a bounce. It's just too risky in my opinion. Wait for a consolidation, a pullback, look for search opportunities, and hit it. That's it briefly for this chart. Lastly, we're talking about GBP-USD. So the only reason we're talking about GBP-USD is because DXY seems to be bearish, and there's a good chance gold GBP-USD USD tends to go higher, right? So you can see DXY, this is the DXY chart, went bearish for a while. So that's what led to the massive pump we saw on GBP-USD and EUR-USD. But at the end of Friday, we had a slight reversal to the upside, which led to the reversal we saw on GBP-USD. So which is this, right? And GB tends to, became weak on Friday, I think, yeah. So quickly, GBP-USD, I'm going to get rid of some of these lines because they are no longer valid. Previously, we spoke about how we're going to go long if price takes out this area of resistance, and we did get the breakout, which led to a massive price movement of approximately 200 pips, decent price movement on GBP-USD. But right now, on the 4 hours time frame, we can see price coming back into this area of value where we failed to break below before we had this massive move to the upside, which currently aligns with the 4 hours, the moving averages on the 4 hours time frame. So the moving averages, EMA and SMAs on the 200 EMA and SMA, which act as my support base for trends, right? You can see over here, when we had this massive decline to the downside, you can see it acted as a very good area of resistance. So we hit it, dump, hit it, dump, hit it, dump. Now we are it's acting as a support for us, right? So you can see over here, didn't quite get into this area of the moving average, but right now we seem to have tested the moving average on the 4 hours time frame. So what you want to see is a sustained bounce, right? So you want to see price slowly create a bottom, right? Slowly create a bottom over here before we get a confirmation that price is going to go higher. Then we go long in continuation of the current trend. This is how I'm going to be trading GBP-USD for a long trade opportunity, because the area of value right now aligns closely with the moving average, right? So that's the reason why I'm watching out for this area of value to see how price reacts to these price levels, how the markets react to these price levels, and if we do get a good bounce and some sort of bottoming pattern, right, like a series of candles showing bullish momentum, then I'm going to go long on GBP-USD. Similar case, I am likely going to go bearish if we close below this area of value and also close below the moving average, which would enable me take a good trade opportunity aiming for this trend line. So something like this. So if we fail to sustain a bounce, we get a consolidation like this and a bearish breakout to the downside, probably wait for a retest and a follow through, then I'm going to go short. I'm going to go short here, and stop loss is going to be above the consolidation list of the breakout, and take profit target is going to be around this trend line, which will be a risk to reward ratio of stop loss of 40 pips approximately, and a take profit target of 100 pips. So risk to reward ratio of 1 to 2 or 1 to 3, as the case may be. But I'm just saying this right now, but I'm likely not going to take this trade. I'm saying this for those who trade currency pairs. As you all know, I barely and rarely trade currency pairs because it's just a pain in the butt for me. That's why my best chart or my best opportunity this week is going to be gold, which we reviewed earlier at the beginning of this video. That's it for me, guys, this week. See you next week. If you have questions, please leave them in the comment section down below. Once again, if you're interested in learning trade first like professional, check out our complete Forex trading course on Udemy. I have the link attached in the description below as well. That's it for me, guys. See you next week.